Benjamin, so lovely to see you here. I want to talk to you about something that is as prominent as AI right now in Davos, M&A. What's your take?
So super happy to be with you as well, Vaishali. So look, I would say that the market is overall on a positive trajectory. So first, it started to grow again in 24 on the back of a very low 23. And the momentum that we see today is rather good, driven by much stronger fundamentals on the M&A market. So as we speak, the level of activity that we see either on ongoing process or exit preparations is very high. And the general feeling is about optimism or cautious optimism. It depends a bit on the country. We just published an M&A sentiment index and we see a high level of confidence from North American players, a bit lower in Europe, but overall, I would say that we are on a positive momentum. And in that, tech is taking the lion's share, Vaishali. It has grown fast last year in value, M&A deal in value. And I would say that digitization, AI, Gen AI, green transformation were the main driver of that. So a positive trajectory. And Vaishali, what question that I have on tech M&A beyond what I just said, what is driving that fundamentally for you?
First of all, I think there is adjusted expectations on valuations versus, say, in 22. And I think that is a clear reset. I think companies are seeing this as an opportunity to really acquire capabilities or to really double down on growth in key areas. And this is really a way to turbocharge it. And despite the geopolitical uncertainty. And I would say the last thing that I see here is platformization. I think this trend is going to continue. And so, the desire to consolidate will keep growing. And of course, another trend, which is the private equity side does want to see some liquidity as well. So I guess that's also fueling some of that.
That's exactly the point. In fact, extending holding period and mismatch of expectations for valuation between sell side and buy side have been the major challenges experienced by the GPs in the past years. So now the good news is that we start to see a better match. And furthermore, GPs have worked extensively to really try to, let's say, generate operational value creation on plenty of topics. They started with cost takeout or transformation to fund new growth avenues. And now there is a general feeling that more assets are ready for divestment. And one thing that I wonder, so on the tech business and particularly on the corporate M&A side, what is your view on how do companies ensure successful integrations?
Acquiring is only the first step, but even that, I think, requires a systematic and a proactive approach. Too often, I find if you're just reacting versus really stepping back and seeing what is the strategic agenda and what would be the best fit and really working towards that, that I think is the first step. And then, of course, integration. I mean, the normal stuff we talk about, robust planning, taking a transformation lens, not just a synergy lens, and really thinking about how the asset will fundamentally change long-term trajectory. These are all key points. And I think the ones that really pay attention to this, together with culture and talent, which in tech, as you know, is pretty mobile, I think makes a real difference. So, well, I share your cautious optimism, or shall I say optimism, as we see how 2025 will shape up.
Thank you very much, Vaishali. It was a pleasure.
Same here.